Good morning, good evening, and a good afternoon, traders. Steve here at Logic FX Trading, and welcome to another trading room summary on Monday. No, it's Tuesday. Sorry, folks. Yesterday was bank holiday in the UK and Memorial Day in the US. So today's Tuesday, 26th of May 2020. It's a risk on day, guys. The markets are all pushing long today, and the safe havens are all coming off their previous highs, or continuing to come off their previous highs, including the dollar, although we'll look at it on its own in a moment. But certainly the yen and the Swiss franc are dropping today, folks. This is a little chart I put out. I think it was on Friday we were talking about this. Not sure that I talked about it in the summary. This is a copy of the 1987 stock market crash and recovery, guys. Now, there's been an awful lot of debate about whether this was the first drop of a bear market. In other words, this was a pullback before we got the drop, or whether we were going to get a slow and steady recovery. If you look at the NASDAQ, guys, it's basically back to where it was before the pandemic. It's a few pips or a few cents or dollars, whatever you want to call this, off previous highs, which is nuts. It's a V-shaped recovery. Everybody said we wouldn't get a V-shaped recovery, including myself, by the way. But we got to deal with what we've got and not try and cling to something that clearly was wrong. But that's the NASDAQ, which is clearly full of tech companies, which did well through the pandemic, with everyone communicating and, getting on the Netflix and communicating through Zoom and, Facebook and one thing and another. So they've done very well for themselves. The real economy, or the industrial economy, which is more represented by the other markets, the likes of the Dow Jones, well, it hasn't made that recovery. But given where that's gone to, and given that the US and Europe and the UK are now coming out of lockdown, I can only see these continuing to rise. Now, I think we'll probably get a recovery looking more like this with the Dow Jones than a V shape as we got with the NASDAQ. For that reason, what I was saying in the trading room was, anytime, now I'm not expecting a dip today, folks, but anytime you do get a dip in this, rather than look at it as part as a drop, look at it as an opportunity to go long, guys. And you can see here, this was a long, slow process, but the trend was up. So as it drops, trade it up. As it drops, trade it up. As it drops, trade it up. And you're not going to get the timing exactly right. For example, there, if you'd have traded this up, remember this is actually on a daily time scale. It isn't on the 1 hour time scale as we have shown here. This is a daily time scale, guys. So as it moved up there, then there was a drop, and then off it went again. But the probability is, as they drop, they're going to push. As they drop, they're going to push. So I'd be looking more to trade it up rather than down. Now, here's the proviso. If we get a second wave of COVID-19, which is possible and probable, it will then depend on how the markets react to that and how governments react to that. It could be that they lock down specific areas because they can track and trace. It could be that because of the new social distancing measures that have been put into businesses, that they just say, hey, just continue with what you've got there and we'll use track and trace. So maybe we don't get another big push down. On top of that, the markets aren't reflecting the real economy, and therefore maybe they just continue to push on up. So I've taken a different tack, guys. I've gone from looking for the big drop to just saying, hey, they're going to continue to go up, but maybe in a gentle manner like this. Okay, so let's just quickly run through them. China's pulled back down over the last few days, guys, but there's the trend. I would suggest it's going to continue the trend. There's the Aussie. Aussie's doing gangbusters at the minute, guys. It's broken out of this period here where it was running sideways. It's broken out. That's possibly the new trend there. I wouldn't jump long in it at the moment, guys. If you get another pullback, but maybe you see it pushing up, and of course it could go sideways for a while, but still, if you buy the dips, I don't think you're going to go too far wrong. At the moment, there's the Nikkei, guys, taking off. There's the German taking off. The French hasn't quite got back to where it was. That was just an ABC idea we were running with. I don't think that's going to happen either. Hasn't quite got back there, guys, but I could well see it pushing on up. What we got to do yet again is you've got to look for some sort of pullback. Sorry, guys, that's not a very good drawing there, but we'll just try to go quickly in these little recordings because we only have 10 minutes or so, and then see if we can get a push up there. And the UK still has underlying problems with Brexit, guys. Doesn't look like there's any progress being made there. Although I did read an article last night that basically said, only 17% of the UK's economy is actually trading with Europe. The rest of it isn't trading with Europe. 70% of the UK economy revolves around the UK, buying and selling within the UK, industry within the UK, and 17% is trading with Europe. So even if there's a no deal, guys, it'll go to World Trade Organization rules, and they can trade that way, and maybe there'll be a drop on the 17% or an increase in costs in that. But it isn't going to be the end of the UK economy because there isn't a trade deal done with the EU. Obviously, if there is a trade deal done, it will be good for the future. But at the moment, it's not going to be the end of the world, guys. But having said that, it's still there. And over the next few months, any positive news about an agreement will push the UK index up, and the pound, by the way. And any negative news will do the opposite and will push it in the opposite direction. So obviously you've got to keep an eye on that as well. Yet again, the UK is very, very close to previous highs, pulling off at the moment. I don't think it'll go too far. May come down a little bit, but then you would look to see it pushing on up. Nasdaq, S&P, and Dow Jones we've done. Let's have a quick look at the dollar. There's what's happening to the dollar today. Let's just zoom out and get it into perspective. That's risk off, folks. What I've been saying over the last lot of weeks, for anyone who hasn't been listening, is we had the rush to safety, then it came off a little bit because it had been overdone, and then at this point I said we would see something that would look like that. Maybe it would gradually move up before dropping, but as it's turned out, it's been sideways, horizontal. At some point we will get a drop out, guys, and then maybe we get a push back up if the second wave of coronavirus is something to worry about, or the markets get worried about. You'll get a push back up, but at some point the dollar will drop. So I'd be looking for a trend in the dollar for down. That doesn't mean that it can't push up during the week or next week into that sort of zone again, but if it does, look to trade it down. If it pushes down and gives you a setup, look to trade it down, guys. Now, most of you probably won't trade the actual index, but you can take that information and then plug it into the other major pairs. Sorry, guys, I'm cleaning that up. There's the effect on the euro. It's been going sideways. Is this the one that's going to break out, or will it come back down for another one? But eventually the trade has to be in that direction. There's the pound already going long after an ABC correction. 1, 2, 3, 4, 5, A, B, C, finished. It's moving long, folks. Aussie, as ever, pushing on up. New Zealand, pushing on up, hitting previous highs, so not a place to get involved at the minute. That breakout was the place to get involved, or down there. Yen don't bother with, because it's also a safe haven, and it's coming off. Safe haven, and it's coming off as well. But then you can also take the yen and go and look, yen and Swiss franc, and go and look for opportunities. Euro yen, there you go. That's the euro strengthening and the yen weakening. Possibly down there was the place to get involved, or if you get another pullback. But there's my arrow. I think this is going to go long. Euro Swiss, same thing. Had a big push up last week. We're getting a correction. Maybe there's another trade to get involved in there, folks. Okay, that'll do for the minute. It's a risk on day. Speak to you all again tomorrow, hopefully. Bye for now.